Hey, real estate investors and property owners, or those who are in the process of buying their first property. This is Jeff Taylor, your wealth architect. We are going to get into the power of interest recycling, where you're going to learn how to earn interest, earn profit, build wealth while you are eliminating debt. Uh, as I get into this, I'm going to show you how to turn every dollar you're using to pay debt into a profit generating cash reserve building machines. Now, one of the things is I continue to interview property owners, regardless if they just have a single family or they are in the process of buying their first property or they have multiple properties. Everyone is pretty much making the same mistake where they are in the process of acquiring massive amounts of debt or they're carrying massive amounts of debt but they're in the process of doing that, they are dwindling or depleting their cash reserves. This is a huge threat because then when something goes wrong, most investors do what? They go deeper into debt. I want to help you break that cycle. I want to help you to stop being so dependent upon the bank where when things go bad, you take yourself deeper into debt and you have fewer options. Your number one objective should be while building your real estate empire or buying your next property or buying a property, your number one objective, ladies and gentlemen, in my opinion, should be that you create a profit generating cash reserve building machine. Because the more cash you have, ladies and gentlemen, the more options you have. As it is said, cash is king and real estate is queen. The king takes care of the queen. So if you've ever made a car payment, right, a credit card payment, or you sent a check to the bank for your mortgage, you've probably felt like your money disappeared the moment you use it. Why? Because it did. That's because with traditional debt elimination, that system is broken. You send out payments and that money is gone forever. You can receive no compounding, no return. The money is just gone. And because the property owner slash investor is really the borrower, we don't see it that way. And as a result of that, that takes us deeper and deeper into a negative net worth, which is what we're trying to avoid. But what if I told you there's a way to recycle those payments, right? To earn interest while paying off debt and to build long-term cash reserves using the same dollar. Now, you don't have to have a property to implement this system. Of course you don't. But for those real estate investors, what this does, it helps to create a safety measure so that as you build your cash reserves, not only are you in a safer financial position, but you're also able to do more or expand your real estate empire even further because why? You have more cash reserve. So listen, this is not a theory. This is how banks operate. This is how the wealthy operate, where they just don't pay down debt. They just don't pay the debt. They make money from it. Okay. All right. So the whole idea of understanding interest recycling is the strategy of borrowing money at a lower rate and using it to eliminate higher interest rate debt. Now, are there some exceptions to this? Yes, there are. There are a variety of different strategies that I use in different situations, but keep this in mind. Put a little asterisk in your notes here. The number one objective in this process is building cash reserves. So if you're going to be, especially if you're going to be taking out more debt, you've got to get yourself positioned so that your cash reserves becomes greater than your debt. This is so important, and that we're using debt to create the five miracles of money. Now, if you watch my videos, take a moment, put that in your notes, watch the five miracles of money. Okay, I got to get into this. So, uh, so in this case, we're talking about borrowing at a lower rate, using it to eliminate higher interest debt. So we're going to, in this case, use the building of an index universal life. The reason this is my preferred product, because the only thing I can tell you is that I've been using it for over 20 years, and my greatest regret is that I didn't start early and I didn't put more into them. So how about that? But instead of paying your car note, instead of paying that debt, that credit card, we want to reroute that payment. Okay. we want to borrow strategically. Let's just say, for example, and this is only an example. Please do not take this as a personal advice or personal coaching. We're just doing a walkthrough from an entertainment perspective. Okay. So we're going to borrow strategically from that IUL, let's just say at 4 to 6%, right? And we're going to use that loan to pay off the high interest debt from the credit card. Let's just say 19% on the credit card. I talked to an investor the other day. She had a card that she was paying 29%. So then you're going to take the monthly payment you were making and deposit it into your IUL, which may earn 6 to 10% interest, tax-free. Now, I'm not here to promote a certain rate of return. That's not the point here. As a matter of fact, when this system is done correctly, you can literally create your own profit in this process when this is done strategically. Okay, so now let's just say, for example, you got $500 a month that's working in two places where you are eliminating that debt, right? And you are growing your reserves. This is very, very powerful because when you're talking about eliminating debt, and growing your reserves, that within itself has an ROI. But that ROI is not going to be reflected in an illustration. This is the reason why you cannot use the interest rate a policy may be earning as the litmus test. No, that is a part of the process. As a matter of fact, in my opinion, the interest rate on the policy is the smallest point or benefit of the process. It is at the bottom, not at the top. The fact that we are eliminating debt and absorbing that debt and creating interest on that debt is far more powerful than the actual rate of return within the policy. Now, I'm not saying that it's not important, no, but I am saying that we do not want to emphasize the interest rate accumulation on the policy because that is the least benefit. Okay, now we're talking about recycling, not just repayment. Okay, so, okay, let me show you an example here. So let's just call this person Tammy. All right, Tammy has $22,000 in credit card debt at 18.9%. Right, there's a car loan of $450 a month remaining and no savings or minimum savings. Or listen to this, investors, if your cash reserves is less than your debt, you have an unbalanced real estate portfolio. Why? You should have more cash than you have actual debt. And if those of you who have your properties paid off, that is a serious no-no as well, because you are creating a negative net worth when you have equity in your properties. Why? Because the same problem that you have with paying debt, the money is gone forever. The same problem you have when you have property equity. Why? Because when you have property equity and you're not creating the five miracles of money, interest, cash reserve, cash flow, profit, and velocity of money from that property equity, you are losing money and you are creating a negative net worth. Okay, that's extra bonus. There's extra material in there, kind of cramming it in this conversation here, because I want you to understand that this is not your everyday run-of-the-mill, just put money into a policy. This is a process. And when you have the right coach, that coach can really help you expand your finances at a higher level. Okay, so we're going to open up a line of credit like with 5% interest from your policy, right? We're going to use it to pay off the credit cards. Then we want to redirect that $750 a month she was sending to creditors and instead funnel that money into her policy. Now, I get it. Your numbers are different. I understand that. Let's take a moment right here. If you're thinking to yourself, okay, Jeff, I need to have a 15-minute conversation with you. Just take a moment, go to the description. You can see my Calendly link. Just select the 15-minute option. And once you make that reservation, I will send you a kind of pre-work preparation, how to get ready for that 15-minute. But the intent here is to find out how this system can potentially work for you. Okay, so in 24 months, this is what happened. First of all, her debt is gone. I cannot tell you how many phone calls or how many times someone's credit went up after they did this and they weren't expecting that. I always hold that off to later down the road when they actually see that happening. One of my calls, a client tells me, man, I've never had an 800 credit score until I met you, start working with you. So I'm always excited about that. Again, that's the reason why the interest rate on your policy is not the highest and most important aspect of this process. Okay, let's keep going. So in this case, her credit score goes up 84 points. I don't know what your credit score is going to go up. It depends on the situation. Builds up $21,000 in cash reserve in her policy. And then she's going to access that money again for her daughter's college education. Or for my real estate investors, when we're putting this case design together, what we're looking for is how do we build more reserves to buy more property or to maybe for repairs or something like that. But the objective is to recycle those dollars, right? Okay, so what's beautiful about this story of having $21,000 in cash reserves, and now she's going to access that money again to borrow for her daughter's college, is that she didn't go work, she didn't have to go get a second job. She didn't have to work overtime. She just changed the direction of her money. Okay, so here's why this works mathematically, right? Let's say you borrow $20,000 at 5% and you pay off debt costing you 18%. Obviously, that's a beautiful thing because, again, real estate investors, when you have credit card interest that's paying more than your savings, you have a problem. Okay. So on the surface, if you're already saving 30%, 13% interest, that's huge, right? Okay. But the power is in what you do with the monthly cash flow you free up. This is one of the benefits of this process is when you free up cash flow, that has a powerful ROI. And then we put that money into the IUL, it's going to grow tax-free and it creates tax-free compounding. And then okay, all right. So I'm sorry, I'm getting a little excited here. So let me finish telling this story. So over a 10-year period, okay, she's directing $750, redirecting that money into her policies. And even modestly, she can earn, build up another $120,000 to $150,000 in tax-free reserves. And again, that's not even the true ROI when we're talking about using these dollars to pay off debt or to what I call absorb debt. Because when you are using your policy to pay debt, you are absorbing that debt, where you're going to literally create wealth from that debt for the rest of your life or as long as that policy is in force. Okay, and that's what the banks do. They recycle their exactly the same thing we're doing when we're using their credit cards. That's the exact same thing we're doing when we're paying mortgages, is that we are recycling payments, but we're doing it to the benefit of the bank. And there's nothing wrong with that. We need banks, but we want to duplicate their process to build our cash reserves and to build more wealth for us. Okay. All right. So let's stop thinking like the borrower, ladies and gentlemen. Let me say this again. Let's stop thinking like the borrower and start thinking like the banker. Okay, so truth. If you keep sending payments out with no return, you're losing money every single month. You're not just paying debt, you're forfeiting wealth you could be building at the same time. The cost of inaction, it isn't just more debt, ladies and gentlemen. It's missed opportunity. Because in this example, when we say that every $500 per month you send to Visa is a $100,000 future you have forfeited and sacrificed. Is that what you want to continue to do, investors? I know, I get it. You're using the BRRR method or the Burr method. You're using some other method. Listen, I'm not here to challenge any of that. The point that I'm asking you is in the course of doing that, are you creating the 5 miracles of money on that process at the same time and building cash reserves, which will create more security and safety for you in the short term and long term, okay? So if you're okay with losing 6 figures to eliminate 5-figure debt, or do you want to be smarter? Let's make this simple. I want to give you a reserve builder worksheet, okay? Take a moment. You can download the reserve worksheet. Set up your 15-minute appointment, and I'm going to go through that with you. Now, it's not enough time to do a comprehensive dive in, but for those investors who are serious about creating an additional tier of wealth, that is not dependent upon tenants or property appreciation, you're going to appreciate this. Just do a recap of what could it look like if we were redirecting your payments and calculating your new cash value. I love doing this, especially for my new investors. They can see and they're feeling the fear of going into debt with real estate investing. So when we talk about building cash reserves, despite the fact that they're taking out debt, it helps them to see a much more brighter, much more potential in the overall portfolio. Okay, so schedule your 15 minutes with me and let's talk about this. Let's run some actual numbers and see what would happen if you use my reserve builder worksheet to get a good some sense of how this will fit into your scenario. Okay, so this was class 7. In class 8, I'm going to show you how to multiply that cash flow without tenants, without extra hours or market risk. Until then, never lose money. What's our rule number 1? To position yourself to never lose money. It's an ongoing, evolving process. We don't want to lose money in debt. We don't want to lose money in savings, and we certainly don't want to lose money in opportunity. Listen, if I'm saying something that triggers positive thoughts and you like what you're hearing, I would love to do a free class for your group or your organization. Let's talk about that. Like, share, tell 15 people, and hey, register for my next seminar. I'd love to see you there. Take care.